because today we're going to be talking about overtrading and revenge trading. And specifically, we're going to cover a few topics, and this whole part about overtrading and revenge trading will be split into two streams because it's too much content to consume in one stream. It's just too much to handle in one stream. So we're going to do it in two. So that means that in a few weeks' time, we'll do a part two. And we'll make sure to upload this stream as well on YouTube so everyone is able to catch up if they want to. If you haven't seen the previous streams, they are uploaded on my YouTube. They're all called Trading Psychology. There's also a small playlist for it. So if you want to catch up on that afterwards, I'd say definitely do so, because we covered a lot of really interesting information regarding trading psychology. And we don't only go into what it is and how it happens or how to fix it, but we really do a deep dive into what happens inside your brain on a biological level when all these different trading behaviors occur. Because the better we understand how our brain works, the better we're able to operate with it, and the better we'll be able to understand ourselves. And eventually, we'll be better traders overall if we're able to handle everything better, right? Which is the end goal for most of us in here. So, as a question, has anyone ever experienced overtrading or revenge trading in here? I know I have. I think a lot of people probably experience it in some way. Type a 1 in the chat if you've ever experienced overtrading or revenge trading. I think most traders in here, or in general, have probably experienced something like that, right? It's a very, very, very common issue or behavior that shows up in traders, right? So yeah, today we're covering overtrading and revenge trading. Let me see. So first things first, a little introduction. In the previous parts, we examined how dopamine shapes decision making in trading, and why the nervous system overvalues immediate rewards, and how fear and stress reactions form around losses, right? So we covered the basics regarding that. Overtrading and revenge trading, they are not separate problems from these mechanisms, but they usually are direct consequences of the same systems being pushed into extreme conditions. You know what? Let me drop the link for you where you can watch the previous ones, if you give me 1 second. There you go. This is the YouTube channel. And then if you look at the playlist, yeah, it's inside live stream recordings, but I'll make sure to create a specific live stream for the trading psychology ones. Anyway, back to where we were. Overtrading and revenge trading, they are not separate problems from these mechanisms that we talked about earlier. They usually are direct consequences of the same systems being pushed into extreme conditions. Right? So what is overtrading? And what are these conditions? It's elevated stress hormones, it's dopamine spikes and crashes after wins and losses. It's fear circuits that were originally designed for physical survival, and cognitive biases that distort how we perceive risk and probability. So this part focuses specifically on what happens in the brain during overtrading and revenge trading, and why these behaviors are so persistent. And eventually we're going to learn how to build a structured way out of this loop. So, first of all, what is overtrading and revenge trading? I think probably most of you are familiar, but overtrading is a pattern where traders open more positions than their plan allows them to. They trade outside their system, or they continue trading when mental or physical resources are already depleted. And usually it's characterized by increased trading frequency without clear setups, reduced quality of analysis, and ignoring predefined rules. So no time window, no conditions, no number of trades, etc., etc. Now, revenge trading is a specific form of this overtrading where the main motive is not to follow the system. but to get back at what was lost. And usually it appears after a large loss or a quick sequence of losing trades, giving back a big part of today's week or today's profits or this week's profit, for example. Those are usually very common things that happen. Now, from the outside, both look like emotional trading, right? But from the inside, they are structured neurobiological reactions to loss, uncertainty, and stress, right? So that's how we're going to approach these things today. So, what happens inside the brain during overtrading or revenge trading? That's the first step that we're always going to look at, right? We did the same for the fear of losing, and we did the same to be able to understand how dopamine affects trading decisions, right? And the first thing that happens inside the brain during trading or overtrading or revenge trading is acute stress and cortisol. And in the last stream we did about the fear of losses, we looked at the HPA axis and the role of cortisol as a stress hormone, right? It's the main hormone your body produces when you're in a stressful situation. And after a significant loss in trading, this axis is activated again. So our part of the brain that detects a threat, which is called the amygdala, in this case, a financial loss is seen as a threat. It's an attack on your sense of safety or competence, right? So cortisol levels begin to increase to mobilize energy to prepare the body for a fight or flight situation, right? And even though we both understand that there is no fight or flight situation, your body still treats it that way. And in real trading environments, there have been multiple studies on financial traders that have shown that cortisol rises with market volatility and uncertainty. So the more volatile a market is and the more unclear it is, the more cortisol your body will produce. So if we think about it logically, right, it's probably because when our body or our mind cannot understand something and it cannot predict, because that's what our brain tries to do constantly, just to predict the next logical thing to happen. If it cannot predict anything, it starts to stress out, right? So that's why it's also going to produce cortisol. Now, cortisol has a few very important effects in this context, right? Because in the beginning, moderate stress sharpens your focus and increases your alertness. So a little bit of cortisol is fine because it helps you focus a little bit more, and it just makes sure you're alert, right? But when the stress is too strong or prolonged, it impairs decision making. So it reduces your memory, your working memory, and it can push risk preferences away from your rational baselines, right? So it's kind of what we talked about in the previous stream with the inverted U curve, where there's a certain amount of cortisol that's fine to have, and if you go above it, all the benefits that you get from cortisol, they basically disappear, and it's only bad news, right? So during revenge trading, you're usually not dealing with mild stress, but with acute emotionally loaded stress, right? Usually after a loss. So that makes sure the system shifts from analytical mode to survival mode. And that's the big problem we have. Then, number 2, what happens again is amygdala dominance and loss of prefrontal cortex. This is the part in the brain, the amygdala, that detects threats in our brain that we talked about earlier. And this is the part of the brain that's responsible for rational decision making, right? So under normal conditions, the prefrontal cortex helps with planning, it helps with evaluating probabilities, delaying gratification, and following rules, right? The amygdala, below here, rapidly detects threats and generates fear, anxiety, and urgency, right? It's like our survival part of the brain that's used to bypass the prefrontal cortex in order to make decisions under high stress. So under high stress, the balance between these two, they start to shift, right? The fast route that is used with the amygdala becomes more reactive, right? And the prefrontal cortex temporarily loses some of its ability to inhibit emotional impulses. So what does this look like in real life? Basically, it's you feel a strong urge to act, right? Let's say you've taken a loss, let's say you've taken a trade that's out of your plan, and you start to panic a little bit, or you notice your stress level is getting a little bit higher, and you get a really strong urge to recover, to fix it, to get it back, actually before you have fully processed the situation or what's happening, right? Your ability to evaluate risk, to follow a checklist, or to think in terms of probability is suddenly reduced a lot, right? It's probably something that some people can relate to, right? I definitely can relate to it, and I think multiple people can, right? It's very common among traders. So suddenly it becomes much, much easier to ignore your own rules, and it becomes much harder to stop yourself, right? And for example, this is often described as being on tilt, right? Same goes in poker, same thing. The mechanism is very similar. Emotional centers temporarily dominate rational centers. Then, what happens next? Let's see. Dopamine, uncertainty, and loss chasing. So, in the previous streams about how dopamine affects trading decisions, we found out that dopamine spikes when a potential reward appears, right? Not even a reward, but a potential reward. Now, the nervous system values immediate rewards more than delayed one. And this is called hyperbolic discounting. And I've probably explained it quite a few times, but I think a lot of people haven't seen the previous stream. So we'll just do a quick recap about what it is. Why does your brain value immediate rewards more than delayed ones? Let's look at it from an evolutionary perspective or a survival perspective. And that is a very simple one, which is food, right? Let's say you have to fend for yourself in the wild and you need to get food, right? Because you need to survive. If you find food, you're more likely going to eat it right away when you're starving, right? Because your body does not, or your brain, or you yourself, you don't know if the food's going to be there in 1 day, in 2 days, in 3 days, or in 4 days. So most likely you're going to try to get the food as soon as possible, right? Because you need to eat. So your brain values immediate rewards, also known as the food right away. It values that more than having food tomorrow or the day after, right? Because you don't know if it's going to be there. So yeah, when the expected reward that we talked about, the potential reward, does not arrive, dopamine will start to drop below the baseline of dopamine, right? Causing a psychological pain. And this is called a reward prediction error. So after a loss, two things happen at once. First, you experience a negative emotional state, which could be, because of the loss, or you might feel frustrated, you might feel disappointed. And then your nervous system remembers that trading itself can quickly restore dopamine if a trade goes well. Because on the other side, you might experience the other things or positive emotions when you take a winning trade, where you're happy and you're confident, for example. So your nervous system understands that and will try to get you to restore that dopamine by chasing another trade because it knows that it can also work out very well for you. So in gambling research, this pattern of trying to immediately recover a loss is called loss chasing. And it's strongly linked to dysfunctional dopamine signaling and an impaired executive control. And an important detail is, though, in gambling and trading, dopamine doesn't only spike when we win, but it will also spike in certain uncertain situations, especially when we have like 50-50 probability outcomes. That's when our body will also release dopamine, right? So we get a dopamine spike just by looking at charts and stuff happening on the charts because we're so trained to do so, right? And we understand that certain things, such as price trading into a fair value gap or price expanding or taking out liquidity, that it basically can lead towards a reward, right? So our body already understands that it's something that could be good and therefore it would produce dopamine already. So that means the state of maybe I can get it back on the next trade itself, that statement or the state is already rewarding. The emotional urge to quickly open another position is partially driven by this dopamine uncertainty loop, and it's not driven by rational expectancy, right? So revenge trading is therefore not just emotional, but it's a specific combination of dopamine trying to escape the pain of loss, cortisol and adrenaline preparing your body for rapid action, and then reduce prefrontal cortex control over impulsive decisions because the amygdala that we looked at starts to take over. Now, then the last thing that happens with the last thing that happens inside the brain is also something interesting, which is called habit loops and neuroplasticity. Has anyone ever heard of neuroplasticity and what it means? Type a 1 in the chat if you haven't heard of it at all. I see a yes. Nope. Basically, what neuroplasticity is that repeated behaviors, they basically form habit circuits. Adaptation, indeed, right? It's basically your brain starting to remember certain stuff after repetition. That's it. It's very simple. So each time, let's say you react to a loss by, let's say you take a big hit, right? A big loss, and you feel stress and anger, and you immediately open a new trade with the worse logic behind the trade or larger size, for example, you're basically strengthening a neural pathway that connects loss to stress, to impulse, to action. And over time, this becomes more automatic, right? So first we have a trigger, which could be a big loss or a losing streak, giving back profits to the market, missing a move, or the fear of missing out. Then it moves over and we get an emotional response, which could be anger or fear or FOMO again, shame, frustration, which again, because it's emotional, leads to an impulsive action, which could be overtrading, revenge trading, oversizing. This will lead to a short-term relief because this we know that our brain sees this as a potential reward, which could lead to dopamine. So it's a short-term relief. So you get thoughts like, at least I did something, or I hope it works out, which are thoughts you don't want to have in this situation. But eventually it has long-term consequences because, you get a bigger drawdown, maybe loss of confidence and more stress, right? And then we get back at neuroplasticity, and each repetition strengthens this loop in the brain. So every time we repeat this, it becomes stronger and stronger and stronger. Because the brain learns, when I feel this specific pain, I respond by doing this. And the behavior starts to require less conscious deliberation, right? The more you do it, the less rational thinking or conscious thinking you need for your brain to start acting on it, and it becomes more automatic. So it becomes easier to slip into revenge trading, even on relatively small losses, because the pattern is really wired inside your brain. At the same time, the opposite is also true. Consistently executing a, for example, cooldown protocol after losses or stopping after a set daily limit wires a different habit loop. It will go from loss to pause to structured review to a planned restart, right? Which is a very different pathway than the other one that you could be strengthening, which is loss, stress, impulse, action, right? So that's already part one and a slight hint to how we break the cycle. It's by making sure we reinforce the right habits over and over and over again and make sure we really train and rewire our brain that way. Now, why does it happen? Why do we overtrade? Why do we revenge trade? We're going to look at some psychological mechanisms that trigger this. By the way, in the meantime, if you have any questions, just put them in the chat and we'll make sure to answer them right away. Is there a way to re-listen to this? Yes, I'm recording it, so I'm going to making sure to post this on YouTube as well. So it will be uploaded on YouTube ASAP. Probably today still. So probably end of the day, you'll be able to see it on YouTube, which is linked just above, right here. And if you're interested, there's also 4 more parts to this where we basically deep dive into other parts of trading psychology as well. So a lot of content about it. Of course. I love to do this. So yeah, I'll gladly do this. And we're going to continue the trading psychology streams for sure. So coming weeks, we'll be having more of these. So let's see. Why does it happen? Why do we have revenge trading? We're going to look at some psychological mechanisms, right? The first one, we're going to look at several well-known psychological mechanisms that feed into overtrading and revenge trading. First one being loss aversion and risk-seeking after losses, right? And this is something that comes from behavioral economics, and it shows that the pain of losing is psychologically stronger than the pleasure of winning in a similar amount. So let's say we win a trade, which is, let's say, $200, right? This would signify the happiness that we gain from it, right? Or the pleasure that we gain from it. A $200 loss or win, sorry. But at the same time, a $200 loss feels way worse, like way worse, right? Even though it's the same amount. But that's just something that happens in our brain. So after some losses, some people become more willing to take risk in an attempt to recover quickly, right? Which is risk-seeking in the loss domain, right? And in trading, this could look like increasing your position size after a loss, removing your stop loss or moving it further away in the hopes of being able to stay into the trade, or taking trades that don't meet your system because you just need one move to get back, just one good move. And these are all lies you tell yourself, of course, because that's not how it works. Then, second thing, reward prediction error and the need to get back to zero. Let's say you went into a trade with the mental picture. If this works, I will gain XYZ, right? Because you have that in your mind, dopamine spiked in anticipation of that outcome, right? And then when instead you get minus ABC, XYZ, so instead you thought, if this works, I will gain $200, but instead you get minus 100. The mismatch between expectations and the result, which is the reward prediction error, basically creates a dopamine crash, right? So this is the anticipation where you're thinking about, oh, I'm going to earn $200 if this, or $2,000 if this trade takes out, or if it works out, right? But then after you take a loss and you lose 1,000, you get a crash in the dopamine system, right? And the only thing your brain and your body at that moment when you're down here wants to do is to eliminate this uncomfortable state, right? And it wants to basically return to zero, as well as on the dopamine baseline, as well as on the original equity that you were on as fast as possible in terms of like the money counter, right? So revenge trading is basically an attempt to repair the prediction error immediately, regardless of whether the next decision has a positive expectancy or not, right? It could be that the market has been chopping all morning long, just moving sideways between, I don't know, a 20-point range on NASDAQ, for example, which would be very small. So it would basically be not doing nothing, right? Let's say you take a loss there. Your brain still wants you to go back in and take a trade there, even though you rationally know it's not the right environment to trade for you, just because it wants to repair the prediction error. And it's not even looking at if the trade has a positive expectancy or not, right? So these are two very systematic and neurological things that happen in our brain, right? Then, third one would be ego, identity, and self-worth, right? Which is a big thing, because for many traders, the profit and loss, or P&L, is unconsciously tied to their self-esteem. It's tied to their perceived competence and basically their sense of control over life, right? And a large loss can therefore feel not only like a financial event, but like a personal attack on your identity, right? Because let's say you've spent a lot of time on doing your analysis, you've spent a lot of time studying the markets, you've spent a lot of time tape reading, all that kind of stuff. You spend a lot of time on your pre-market routines and whatever, and therefore your body starts to feel like you deserve a win, right? You deserve it all, and because of all those positive things you do, a reward should be on the other side of that, right? But sometimes stuff happens. You take a big loss, and it feels like all the stuff you did was for nothing, basically, right? If I do all this analysis, if I do all this work X Y Z, why can't I get a winning trade, right? And that can sometimes activate bad behavior, right? It can activate defensive reaction. I'll show the market I'm right, or I know I'm right, I'm gonna force it on it, right? Or perfectionism, where you can't accept that you were wrong and you have to fix it right now, right? And these ego-based reactions only amplify the urge to trade impulsively instead of accepting the loss as a normal part of probabilistic process, right? Because at the end of the day, if we're trading, it's all just a matter of probabilities and executing a system over and over and over and over again in the same way. And that will guarantee profits, or not guarantee, but that will lead to profitability, right? So that's a big thing in trading for sure. And I think this is a topic that we're going to dive into soon as well, where we're going to look at the self-reflection part and the ego, identity, and self-worth part of trading psychology, which will be a very interesting deep dive. And then the last one is cognitive biases. So there's multiple cognitive biases that will contribute to this whole overtrading mechanism, right? First one being the sunk cost fallacy. You're basically continuing to risk capital because you already lost so much today, so you can't stop now, right? Some people have that. You're into deep. You're too far in to stop now, so might as well just go on, right? Or this could also happen in the form of you're already close to blowing this evaluation, so might as well just risk it, right? And you'll just get a new one anyway, so it doesn't matter, right? But at the end of the day, it's only reinforcing bad behavior, unfortunately. Ben, are you a mathematician? Because I saw your fractal image. No, I'm not a mathematician. I wish. I'm not that good at math. Then we have omission bias, and it's seeing inaction as painful more than doing something, right? Even if both options can harm you. Sometimes people feel like when they're not taking a trade, they are unproductive and they're not doing well because you are a trader, you should take trades. Some people, sometimes it happens that a certain system does not show a setup for an entire week or 2 weeks or 3 weeks, right? And it's important that you're able to recognize that, you're only following your system and not just taking trades for the sake of taking a trade because you're a trader, right? So yeah, seeing inaction can be painful to some people. And number 3 is confirmation bias. So after a loss, people will often start to search for arguments that supports an immediate re-entry in the same direction, right? And this happens in the form of, let's say you get stopped out, but then the market, maybe the candle retraces and you see a large wick, and then you start to say to yourself, oh, it was just a liquidity sweep, or we're just reaching for sell side and now we'll reverse. And then people start to re-enter the trade, and maybe that goes bad as well. They have a second loss, and then market starts to slightly reverse and print a fair value gap into the right time or the right direction, and you're like, see, I knew I was right, and you start to enter again because you want to be right so bad. And then well, what happens again? You might take a third loss, and then who knows what happens after that, right? And together they kind of create a mental environment in which it feels logical to revenge trade, even though it contradicts your own system. See what happens there? You're basically telling yourself and your brain that it's logical to open a next trade, right? And you're seeking arguments to basically convince yourself that you should open a new trade. Let's see, Sonic says, yup, I've done that plenty of times. It happens a lot to me on when I get sucked into the second chart. I have to pull myself up to make sure I keep in alignment with the higher time frame. Yeah, that's something that sometimes happens to people, especially because on the seconds time frame, the frequency of candles is so high, right? And the amount of movement is so much. And that basically ties back to what we looked at earlier, right? How volatility fuels um, cortisol, right? Because when stuff starts to go faster, we basically um, perceive it as more of a threat or more that's happening, and you basically start to get more anxious, and um, you'll you're more likely to take part in these revenge trading slash FOMO trading behaviors, because that's when usually um, cortisol and all those stuff that we don't want at that moment are at its highest, right? Um, yeah, when you're negotiating with yourself to break your rules or system, it's dangerous for your long-term profitability. It definitely is, yeah, for sure. You're seeing multiple shifts in structure, and it's just minor pullbacks. And if you don't keep your main alignment higher, you end up chasing yourself in circles. Exactly. And that's a very good point you make there with seeing multiple shifts in structures. They might seem harmless as just a simple shift in structure, and therefore you can make a choice to enter a trade. But it's exactly those kind of things that trigger dopamine spikes, right? Because when you see a shift in structure, you're basically conditioned to understand that the market will reverse after that, right? And if your brain understands that the market will reverse after a break of structure or market structure shift, it will understand or say to itself, okay, it's going into a specific direction. If you know that's going to a specific direction, you want to be able to profit off of it, right? And you can see how the kind of thought loop kind of reinforces itself there, and then you're on the wrong side of the market suddenly, right? And then we get the reward prediction error again, where you thought you saw a market structure shift and you thought you were getting an expansion, you thought you were getting a good trade, and suddenly you're not, right? And we end up in the same feedback loops over and over and over again. Yeah, exactly that gif. Very fitting, very fitting. Do we have any questions, by the way, about what we talked about so far? Let's see. It's like you have to experience multiple ego deaths throughout the trading day. It's your system versus your ego being right. Yeah, ego is something that a lot of traders, even maybe while not knowing it, is in their way. Definitely. But that's why I think it's a very interesting topic to talk about someday. And I definitely think I will add it to the trading psychology series at one point. The first 5 streams so far have been very technical, very on a biological level. But I think eventually, as we start to get deeper and deeper, we want to explore the inner self a little bit more, because then we already understand the machine on a biological level, right? So what's left is understanding yourself on a even deeper level than that, right? Let's see. Sonic says, yeah, and if it's hard to manage now, set hard limits, set amount of trades and mask risk, and let your platform take you out once hit. Do that as long as you must until you build that new pathway to manage on your own. Perfect advice, exactly. If we're able to condition ourselves to, by using those hard limits, those max amount of trades and those max risk, max profits for the day, and indeed letting your platform lock you out once it hits, we can basically rewire our brain eventually over time. Yeah, the way I've managed to improve on these is no changing in anything until the week ends. Look at the journal, and then you can decide if you can adjust or do some tweaks in your system. Yeah, exactly. Letting data speak for yourself, for you, instead of trying to make up your own decisions, right? If you have data on something, that's the only way you can make rational choices on your system. Let's see. Sonic says it's wild as soon as that lock is on for the day, how your mind calms down, even if you're on a tilt. Yeah, for sure. for sure, because that's the actual moment you know you cannot do anything anymore, and your brain starts to understand, okay, there's nothing I can do in this trading stuff to get back above that dopamine baseline. So we'll try to find alternate things, and it kind of loses the tilt that you were having earlier. So I definitely do agree with this. Personally, every time I'm done for the day, I just immediately lock out my trading accounts because I'm just like, I don't need them today anymore. I want to keep myself from making stupid mistakes. So I just lock them out immediately. And honestly, it's the best choice you can make on certain days. Especially if you feel like you get annoyed and you're starting to feel that annoyance coming, you start to feel a bit of nervousness come in. Just locking it out or just locking off your account usually is like does wonders. You immediately calm down, and it also helps you to accept that even if the market afterwards runs towards all the targets you've been looking at, right? Even then, that you could not have been part of it, right? So you can also not blame anything. You can also not say, I could have, should have, would have, because it's just the account's not working, right? There's no way you could have entered. Um, so sometimes it can help by removing a lot of that stuff. Let's see. So in the next trading psychology stream, we will go over these three things: common triggers uh, for revenge trading, the cycle of overtrading and revenge trading, how it works, and then how we are going to break that cycle. So that will be part 2 of the trading or revenge trading series. And I think we're going to do it either next week or the week after, probably. Let's see. Do we have any questions, by the way, about anything trading psychology related or trading related in general? Or did anyone take any trades today that they want to show? Also fine with me. So I kind of want to keep these streams not too long, because these presentations can be quite theoretical. And if I start to dump too much information on you guys, usually, like, that's what I have, it just doesn't stick, right? Going over information in like 40 minutes time is usually like the point after which your brain really doesn't start to pay attention anymore. So I think these times are the best to keep it like this. Let's see. You caught that last little pop to previously say hi. You took a couple trades in London and called it. Well, sounds like a good day, right? Happy to hear that. Well, let's go, Jay Martinez. Glad you enjoyed it. Let's see. Building the account slowly and working towards repeatable, or working on those repeatable habits. That's good to hear. That's perfect. I mean, that's how we should progress as a trader, right? Usually, by the way, we always have a motivational or psychology video at the end. I'm not sure if Josh has another one somewhere laying around, or if he wants to join the stage. You do not have one at the moment. That's okay. Another great session again. Appreciate these sessions a lot. It's one of the most important steps for you to make big improvements on your psychology and understanding of yourself. Well, I'm really happy to hear that it's helping a lot. Let's see. You recommend aftermarket review sessions to get the feedback when it's fresh in your mind. You're low-key a scalper, so trying to remember why I enter every trade is hard sometimes. Well, if you're a scalper, it depends, right? If are you like a scalper that takes like a lot of trades in a day, or are you someone that just trades the very low time frame and has like 1 or 2 trades a day. Big difference in there, I think. And yeah, indeed, also record your screen if you're a scalper. That really helps. What triggered me to, or triggered you to start looking into your own trading behavior, and how did you measure if I'm successful? Well, what triggered me to start looking into my trading behavior was the fact that at the start was pretty rocky, right? Just like everyone. And eventually I figured that, you know, the better you understand how your brain works, right? I like the thing that happened was like I felt certain trading behavior come up, right? May it be FOMO, may it be revenge trading or whatever, right? I've had it, of course, but I didn't completely understand why it happened. And then I was like, okay, but why does it happen, right? Why does this keep happening to me? So basically, I started to research it, and then once you go into that rabbit hole, um, it was basically a thing of, you know, the better I understand what's happening inside my brain, the better I can rationally deal with it, right? Because before this, it was just being completely led by overtrading, for example, right? And tilting. And then afterwards, if you understand what's actually happening step by step in your brain, you're able to identify it live, right? When you're feeling all that kind of stuff, you basically just understand, wait a minute, it's this and this process that's going on inside my brain at this moment, right? And suddenly it's not this annoying magical behavior that just pops up, but it's suddenly a very systematic thing that you can understand, and you can understand why it happens. And for me, it really helped me, you know, help, or understanding why it happens helped me being able to counter it properly, right? So that's what basically triggered me to look into this. Let's see, you like the lower time frames, you take about 5 to 10 trades a day. Yeah, I'd say probably record your screen, and maybe even yourself, that also works. Recording your stream and yourself. That way you can kind of see how you act while trading. That's also very interesting to look at. Let's see. Do we have any other questions or anything, any topic you guys would like to talk about? What's one way how we can bring these insights into our system? You think action is essential, or this would be like a waste? One way to bring these insights into our system is, firstly, you kind of build a mental framework because you understand how it works, right? If you understand how it works, you're able to build a system or mental framework around it. Meaning, let's say you suffer from overtrading, right? How are you going to bring that into practice? Is, okay, you first got to understand what happens in between you being calm and rational and you being full tilt mode, right? Understand every step that happens in the sequence from one point to the last point. Could be that, for example, it's your legs start shaking, you start to get more nervous, your heartbeat increases, you start to be, I don't know, more nervous, you start to switch time frames constantly, you start to switch tabs, all that kind of like small behavioral things. And then you find the line, or like the line where you kind of switch from being able to make rational decisions to your emotions taking over, right? Once you found that line, you're able to basically stop yourself the next time it happens before you enter that step, right? Because then you're still thinking rationally. So you're still able to close your account, you're still able to walk away, you're still able to lock out your account. Because you know that when it's like in full emotion mode, you're not able to stop yourself anymore, right? So that's one way to bring it into practice. Sometimes you get real nervous for holding profits even more than fearing a loss, and you wonder why. Well, that requires some work into understanding why you are fearful of holding, um, for sure. And that might be something interesting that I could look into for a future stream, for sure. But yeah, a lot of people have that fear of holding profits, and it's also, part conditioning that you can do. So, for example, leaving a very small runner or very small partial open, to just let it run. That's one way to bring it into practice, to be able to basically condition yourself to get used to holding longer. Then there's a second systematic way that you can help yourself holding longer, which is tracking data, just like statistical data on your trading system. And specifically in this case, the max favorable excursion, meaning the maximum time it takes for your trade to be at its most profitable point. So let's say you've recorded 100 trades in your journal, right? And you've recorded the MFE, which is the max favorable excursion, for every one of them, right? On average, you hold your trade for, let's say, 20 minutes, right? But on average, the max favorable excursion is around an hour, right? Then you basically have data and factual data that it might be more profitable to hold your trades longer, right? And then you can be more confident holding them because you have like 100 trades worth of data behind them, right? So that's two ways you can bring it into practice and into reality to basically help you fix that problem over time. At the end of the day, it's all habit building, right? So it won't go away with one trade. It's repetition and repetition and repetition the same way over and over again. That's the way to fix these kind of problems, usually. No worries, guys. Lux and Yoshi Jaeger. I'm happy to help out here. So yeah, these are very interesting things to look at, and I think holding. We already covered the fear of losing. We might cover the fear of holding as the next chapter. That might be interesting. But I do have a lot of research still laying around different parts of trading psychology, so we're far from done. Glad they're insightful, Sonic. Really happy to hear that. So sometimes you lose, but you try to get better. Yeah, I mean, that's the process as a trader, right? You try to get better over time. Well, let's see if there's a few final questions before we round up the stream. And otherwise, I'm gonna wish everyone a great morning. All right, I think we're gonna round up for today. So I want to thank everyone for being here. I want to thank you all for attending, and yeah, make sure to check out the other parts if you haven't seen them yet, because these streams will be much easier to understand if you've seen all the parts. So yeah, really want to thank you all for being here, and then I'll see you in the next stream. All right, have a great morning, evening, or afternoon, wherever you guys are. Time to go touch some grass, exactly. I'll see you guys in the next stream. Bye bye.